Hi everyone! The next section in Chapter 5, we're still talking about markups, markdown, percentages and such, but they're referred to as cash discounts and terms of payment, okay? So often throughout the merchandising chain, the supply chain, there's trade credit, okay? And sometimes on an invoice, you'll be able to see what your potential discounts are. So let's have a look at an invoice. Many of you will have seen something similar to this in accounting, financial accounting 1, and definitely in financial accounting 2. So let's have a look. Okay. So first of all, on an invoice, we have an invoice from Atlantic Athletic Wholesale Limited, and they're being sold to McGarrigle Sports. Sorry about that. Okay, so on here it says what's being sold, what the list price is. Okay, so we've talked about the list price, the ultimate price that the manufacturer thinks that the consumer should pay. And then where it is partway through the chain, so maybe it's the wholesaler to the retail store. On the Universal Gym, they're getting a 30%. On the soccer balls, they're getting the multi-discounts, they're getting 25% and then 15%. And then the hockey pucks, they're getting even more multi-discounts. They're getting 35, then 10, and then 7%. And then it's calculated here, but not only is it multiplied by the list price, but you have to look at the quantity as well. So basically they're going 5 multiplied by the list price, give the discount for a net amount. So that might be a really good practice for you to make sure you can figure out this net amount, okay? And then, of course, adding the 3 net amounts together gives you the invoice total. There's a shipping charge, the HST, and then the total amount due. Up here, we want to look. This is something you should be familiar with as well from accounting, financial accounting 1, and definitely financial accounting 2, is the 210 net 30. Okay, so net 30 is the vendor, supplier, telling the purchaser how many days they have to pay this invoice. So net 30 means that the total amount of $17,268.62 is due in 30 days. But then it's also saying, by telling you 210, it's saying that, however, if you pay this within 10 days, I will give you an extra 2% discount. And then if you look down here at the bottom, 1.5% per month on overdue accounts. So that's them adding interest of 1.5% per month on any amounts in their account that are overdue. So you can see how percentages play such a huge part in business. So let's continue. Sorry about that. Okay, so the invoice normally states the terms of payment, and I mentioned that a couple of seconds ago. So the credit period, the length of time until the invoice is due. On that invoice, it was net 30. The cash discount rate, the discount applied for early payment. You saw that not only is it that you pay early, but it actually tells you how many days you have to pay to get the discount. So in that case, it was 210. The discount period, the 10 days, and the date on which both the credit period and the discount period begin is the date of the invoice. So with ordinary dating, okay, we're just going to skip past that. That's very confusing. So it talks about the 210 net 30. So if the last day of the discount period or the credit period falls on a non-business day, the period is extended to the next business day. So if it's 2/10, so if that 10th day falls on a Saturday or a Sunday, it goes until Monday. Okay, so we can use the formula we have already learned to help with the cash discounts, okay, which is N, the net price, equals list multiplied by 1 minus the discount. But we're going to substitute the invoice amount, okay, for the total invoice amount will go into the place of the L, and the cash discount rate will go into the D. So in that case, it was 2%. So we'd have the invoice amount and multiply that by 1 minus 2%, or 0.02. 1 minus 0.02 is 0.98. So then you'd have the total invoice amount in the place of the L, multiply that by 0.98, and then that'll tell you what the full amount of payment should be for that invoice as long as you pay it within those 10 days. So let's try this. An invoice for $1,000 with terms 2/10 net 30 is dated June 3rd. What payment will settle the invoice on June 7th? Okay, so it's giving you a date. You need to figure out if that falls within the discount or if the whole invoice is due. So pause the video, take a couple of minutes, and solve the question. So you want to know, do you need to figure out the discount amount, or is it the full amount that's due? Okay, so let's solve it. So we've got L for the 1,000. The discount is your 2%. We know our formula, which is the net price, or the amount that we need to pay. And that equals the list price. The list in this case is being the full amount of the invoice and then any discount we're entitled to. So we know that if we pay it within the 10 days, we only have to pay $980 instead of the $1,000. And because June 7th is within the 10 days, that is the amount we need to pay. Okay. I'm going to stop the video here. And I'd like you to try some other examples that I have suggested in the in Brightspace. Thanks everyone, and please let me know if you have any questions.